Welcome back, everyone. Ready for another deep dive? Today we're tackling something that might sound a little dry at first, but trust me, it's way more exciting than the name suggests. We're talking about the pool bancario.
Ah, yes, the pool bancario.
Not exactly the catchiest term, right?
Yeah.
But if you're in business and want a crystal clear view of your company's debt, well, this is your tool. It's like, imagine gathering up all those puzzle pieces of your company's borrowing and putting them together to see the whole picture.
A perfect analogy. The pool bancario is all about bringing together all those loans, all the credits, those financial guarantees your company has with different banks. It gives you this single standardized view, a one-stop shop for your debt obligations.
So no more digging through mountains of bank statements and contracts, right? You've got everything neatly organized in one place. Now, that sounds pretty handy for any company, but why is it especially crucial for, say, the folks in the administrative and financial department?
For the finance pros, a well-maintained pool bancario is like their command center for debt management. Think about it. They can instantly access all that detailed info on outstanding debts, interest rates, you name it, payment schedules, even collateral.
Streamlining things for sure.
Sure.
Saves a ton of time and avoids those potential headaches, especially when you're juggling multiple banks and those complex financial deals.
Absolutely. Centralizing all that information, that's the magic of the pool bancario. It helps the finance department boost their efficiency, cuts down on errors, and gives them a much deeper grasp of the company's overall exposure, financially speaking.
Okay, so internally, we're talking about a super efficient organizational tool. But we know it's not just for internal use, right? Who else might come knocking, wanting a peek at this information?
You're spot on. The pool bancario has some serious external uses too. Auditors, for instance, they love this thing. Often, it's one of the first things they'll ask for during their assessments.
It's like handing them the financial blueprint, right? They can see exactly what's going on.
Exactly. It provides that clear, verifiable proof of the company's debts, lets them check the accuracy of those financial statements. And then there's the world of mergers and acquisitions. The pool bancario is a star player in due diligence processes. You've got potential investors, partners. They all want to understand the company's financial health before they jump in. And this report, it gives them that transparent, detailed overview of the debt profile.
So it's not just about keeping things tidy internally. It can actually make or break those big business decisions and partnerships.
Absolutely. Having a pool bancario ready to go shows you're all about financial transparency, builds trust with potential investors, and can lead to smoother sailing when it comes to those transactions and negotiations.
It's amazing how something that sounds so, technical can have such a huge impact on a company's relationships and opportunities. Now, we've talked about the good stuff, but let's flip the script. What happens if a company doesn't have a pool bancario? What are the risks, especially for those financial managers calling the shots?
That's a crucial question. Without a pool bancario, it's like those financial managers are driving blindfolded. They're missing that complete understanding of the company's total debt, and that can lead to some, let's say uninformed decisions, and frankly, some scenarios that'll keep you up at night.
Okay, now you've got me curious. What kind of scenarios are we talking about here?
Imagine you're all set for an audit, and bam, you're hit with a request for the pool bancario, and you don't have one readily available. You're scrambling, trying to gather all that info. It not only raises eyebrows about how organized your company is, but could even lead to penalties or complications.
So it's not just about looking bad. There are real financial and legal consequences.
Without a doubt. And beyond the whole audit thing, not having a clear picture of your debt, that's a missed opportunity waiting to happen. You might miss out on refinancing deals that could save you money or fail to spot areas where you could cut costs. And all of that. It hits your company's financial health hard.
It's like trying to manage your own money without checking your bank balance or tracking your spending. It's just not sustainable.
You're exactly right. And for those in charge of the company's finances, not having a pool bancario, it's a red flag. It can signal a lack of control, maybe even a lack of diligence, that can impact their professional reputation, even lead to some liability concerns.
This really drives home the point. The pool bancario isn't just a box to tick off on some compliance checklist. It's about responsible financial management, plain and simple.
I couldn't agree more. It's about giving financial professionals the tools they need to make smart decisions, minimize those risks, and ultimately help the company succeed in the long run.
And from what we've discussed so far, it sounds like the pool bancario is a valuable asset for companies of all shapes and sizes, not just those big corporations.
Absolutely. The principles are the same whether you're a multinational giant or a small business just starting out. It's about understanding those financial obligations and having a system in place to manage them effectively.
So for our listeners who are now thinking, okay, I need to get on board with this pool bancario thing, how do they even start? It sounds pretty complex.
I know it might seem daunting, but if you break it down into steps, it's much easier to handle. The first step is like a treasure hunt. Gather all those important documents. We're talking loan agreements, credit facility contracts, anything and everything related to your company's borrowing activities.
So it's kind of like spring cleaning for your financial records. You've got to get everything in one place before you can start organizing.
Exactly. Once you've got all those documents, it's time to get organized. Create a clear structure so you can easily track all the key details for each financial obligation.
What kind of details are we talking about here? What needs to be in this document?
You want to know the type of debt. Is it a loan, a credit line, a guarantee? Then who's the lender, the initial loan amount, the outstanding balance, the interest rate, when is it due, the maturity date, and don't forget any collateral or guarantees tied to that debt.
It sounds like you're creating a detailed inventory of each and every debt the company has.
Precisely. And to make it even more powerful, you can add in things like payment amounts, due dates, anything that helps you manage that debt effectively.
So it's not a static document. It's a living, breathing thing that changes as your company's financial activities change.
You got it. And by keeping your pool bancario up to date and reviewing it regularly, you'll always have a handle on your company's debt and be ready to make proactive decisions to keep your financial house in order.
It's like having a real-time dashboard for your company's debt, giving you those crucial insights. Now, are there any specific formats or templates that companies usually use for a pool bancario, or is it more of a free-for-all?
Well, there's no official template from some regulatory body, but there are definitely some best practices and common elements that you'll find in most companies' pool bancario.
So more of a framework than a rigid set of rules.
Exactly. The most important thing is that the document is clear, comprehensive, and easy to understand. That goes for internal folks and external parties like those auditors or investors we talked about.
Striking that balance between detail and clarity, right?
Precisely. And to really make it sing, you can customize your pool bancario to fit your company's specific needs and financial structure.
This is really highlighting how the pool bancario isn't just some obscure financial jargon. It's a practical and valuable tool that any company can adapt, no matter their size or what industry they're in. Let's dig a little deeper into something you mentioned earlier, the relationship between the pool bancario and the SIRA report. They sound kind of similar, but they're not exactly the same thing, are they?
You're right. They both provide a window into a company's financial well-being, but they serve different purposes and have different scopes. The SIRA report, that stands for Central de Información de Riesgos del Banco de España, it's an official database kept by the Bank of Spain. It's all about tracking credit risks for individuals and companies. Think of it like a credit report, but for businesses.
So if I'm following you, the SIRA report is this central hub of credit information that banks and other financial institutions can use to see how creditworthy potential borrowers are.
Exactly. And while the SIRA report is a handy resource for those financial institutions, it's important to remember that it only includes information on debts that are above a certain amount, usually $9,000.
So it's more of a high-level snapshot of a company's credit exposure?
Precisely. The pool bancario, on the other hand, is much more detailed and comprehensive. It covers all of a company's financial obligations, big or small.
It's like a deep dive into the company's entire debt portfolio.
Exactly.
This is giving me a much clearer picture of how these two documents work together. They both offer valuable information, but they serve different purposes and have different levels of detail.
You got it. And while the SCART report is mainly used by those financial institutions, the pool bancario is something that a lot of different people can use, internal folks and those outside the company. We talked about its value for auditors, investors, and potential partners during due diligence, but it can also be a great resource for a company's management team, board of directors, even employees.
It's like a shared financial roadmap that helps everyone understand the company's debt and make informed decisions.
That's a fantastic way to put it.
This has been incredibly insightful. I think we've laid a solid foundation for understanding what the pool bancario is and why it's so important. But we're just getting started. Let's continue our deep dive in the next part, where we'll explore some real-world applications and get into some specific scenarios.
You know, it's interesting how something like a pool bancario, which sounds very technical, can actually help build a culture of financial responsibility within a company.
It's true. It's not just numbers on a page. When you make this information transparent and accessible, it helps everyone be more aware of the company's financial situation, and then they can see how their own decisions have an impact.
Exactly. And that shared understanding is powerful, especially when you're making those big decisions about growth or investments, or even when you need to cut costs.
Speaking of big decisions, I'm curious about how the pool bancario can help companies at different stages of growth. Let's say you have a startup and they've just gotten their first round of funding. How can having a pool bancario benefit them at that early stage?
For startups, a pool bancario is really valuable when they're looking for more funding or trying to attract investors. It shows a level of financial sophistication that gives potential backers confidence. Imagine you're pitching to investors and you can hand them a clear, concise document that shows all your debt obligations and how you're managing them. It's a strong message.
Like saying, hey, we're not just dreamers with a good idea. We're smart business people, and we take our finances seriously.
Exactly. And as that startup grows, maybe they're considering acquisitions or mergers. Having a well-maintained pool bancario makes those due diligence processes so much smoother. Negotiations are easier too.
So it's something that can grow with a company and provide value at every stage. Okay, let's shift gears a bit and talk about risk management. We touched on this before, but I want to go a little deeper. How can the pool bancario help companies identify and mitigate financial risks?
One of the best things about the pool bancario is that it gives you that comprehensive view of a company's debt. Financial managers can then use that to spot potential risks and take steps to reduce them. For instance, if the pool bancario shows a lot of short-term debt, that could mean there's a liquidity risk.
Meaning the company might have trouble meeting their short-term financial obligations. That sounds like something you definitely want to avoid.
For sure. But with the information from the pool bancario, the finance team can look at options, maybe refinance some of that short-term debt to longer-term obligations and take some pressure off that cash flow.
It's like a financial early warning system, right? It helps you see those potential problems and take action before things get out of control.
Exactly. The pool bancario can also highlight risks that have to do with changes in interest rates. If the report shows a lot of variable rate debt, the company might be exposed if those rates start to climb.
So if rates go up, their debt payments could increase a lot and affect your profitability.
Right. And in those situations, the company could think about using hedging strategies or even look at converting some of that variable rate debt to fixed rate loans to minimize the impact of those potential rate hikes.
It's amazing how much strategic and informed decision-making can come out of this one document. Now let's talk about financial forecasting. Where does the pool bancario fit into a company's forecasting and planning?
If you want to do accurate financial forecasting, you have to have a clear understanding of your current debt. The pool bancario gives you that foundation for projecting your future debt payments. And that's crucial if you want to create realistic budgets and financial plans.
So it's a realistic starting point for projections. Your plans are based on a solid assessment of your debt.
Exactly. And by analyzing the data in the pool bancario, companies can spot potential challenges and opportunities down the road. For example, if a lot of their debt is maturing in a particular year, they can start planning for refinancing or repayment well ahead of time.
It's almost like having a crystal ball, letting you see those future needs and make smart choices.
I like that analogy. And for companies that are thinking about expanding or making new investments, the pool bancario can help them see how much they can borrow and make strategic decisions about financing those plans.
It's not just about handling existing debt. It's also about using debt strategically to grow and hit those goals.
You got it. Now, we've talked about a lot of ways the pool bancario can be helpful, but let's talk about a situation that can be really tough financial distress. How can the pool bancario be helpful if a company finds itself in a difficult spot?
That's a tough subject, but an important one. No one wants to think about it, but financial trouble can happen to anyone.
You're absolutely right. And if that happens, having a well-organized pool bancario can be so valuable. It gives you a clear snapshot of all your debts, interest rates, and when they're due. It's essential information if you need to restructure or negotiate with creditors.
Like laying all your cards on the table so you can have open and honest conversations with lenders about possible solutions.
Exactly. It's not a magic wand, but a pool bancario can make those conversations with creditors more constructive. It might even increase your chances of getting a good deal.
It's about being proactive and showing that you're committed to transparency and responsibility, even when things are tough.
Absolutely. Now, you might be wondering, if the pool bancario is so great, why doesn't every company have one?
And that's a good question. But to create and keep a pool bancario up to date takes time and effort, and a certain amount of financial know-how.
It's not as simple as filling out a form. It's about really understanding those debts and how they relate to the company's overall financial health. Right. And for smaller companies with limited resources, it can be a bit overwhelming. But the benefits definitely outweigh the challenges. And there are resources out there to help companies create and manage their pool bancario effectively.
So it's not an impossible task, and in the long run, the time and effort are worth it.
Totally. Now let's get practical for a minute. We've talked about why a pool bancario is important, but what are some tips for creating and keeping one up to date so it's actually useful?
That's a great question. It would be helpful to have some practical advice on how to make this document really work for you.
The most important things are accuracy and making sure it's complete. You have to double-check all the information that goes into your pool bancario. It should match what's in your loan agreements and other financial paperwork. It's also a good habit to update it regularly, at least every quarter. You have to reflect any changes in your debt.
So you can't just create it and forget about it. It takes constant attention and upkeep.
Exactly. As your company gets bigger and your financial activities become more complex, you might want to think about using specialized software or tools. They can help you manage your pool bancario more efficiently.
It's like moving up from a simple spreadsheet to a more advanced financial system.
That's a perfect way to put it. And remember, if you're unsure about any part of creating or managing your pool bancario, don't be afraid to get advice from financial professionals or consultants. They can give you valuable guidance and make sure you're doing it right and getting the most out of it.
It's always smart to have a trusted advisor, especially when it comes to complicated financial stuff. Okay, we've covered a lot of ground in this deep dive.
Yeah.
We've looked at the different parts of the pool bancario and how important it is in the world of business finance.
I agree. Before we wrap up our deep dive, I want to emphasize one key takeaway. The pool bancario isn't just a box you have to check for compliance. It's a strategic asset.
It can really empower companies to take control of their financial future, make smart decisions, and reach their goals.
You said it.
So we've really dug into the pool bancario. We've seen how it works, the benefits, even those potential downsides. But let's bring it back to you, our listener. What does all of this mean for you in your financial decisions?
That's the cool thing here. Even if you're not the one creating the pool bancario or managing it, understanding what it's for and why it's valuable, it can change how you think about things.
It's like getting financial x-ray vision.
Yeah.
You start to see how all the pieces connect.
Exactly. Let's say you're in sales and you're in the middle of a big contract negotiation. Knowing your company has a solid pool bancario in place, well, it might just give you a little extra confidence boost. It reinforces that idea that your company is financially on top of things.
It's a subtle signal that you're reliable.
Right. Or imagine you're in operations and you're proposing a new project that needs funding. Understanding those pool bancario principles, it can help you frame your proposal in a way that fits with the company's debt strategy.
So it's not just knowing what a pool bancario is, it's about using that knowledge when you're making decisions, no matter what your role is in the company.
And if we zoom out a bit, financial literacy helps everyone. The more people in a company who understand these concepts, the better equipped they are to contribute to its success.
And for those of you who are responsible for the finances, I think this deep dive has really highlighted some important points.
For sure. First off, don't underestimate the power of the pool bancario. It's not just paperwork. It can change how you manage debt, assess risks, and plan for the future.
It's a tool that grows with your company. Whether you're using a simple spreadsheet or some fancy software, the core principles stay the same. Accuracy, transparency, and being proactive about managing your finances.
This brings up a good question for our listeners. How can you take what we've talked about today and put it into practice? Maybe it's time to start a conversation about implementing a pool bancario at your company. Or perhaps you already have one and you can look at how to improve it.
Wherever you're starting from, the important thing is to remember that financial clarity isn't just a goal, it's a process. And the pool bancario can help guide you along the way.
Well put. And remember, knowledge is most valuable when you share it and use it. Don't keep these insights from today's deep dive all to yourself. Talk to your colleagues, your team, your financial advisors. Let's all work towards a business world that's more financially savvy.
And on that note, we've come to the end of our deep dive into the pool bancario. We hope you found it informative and got you thinking. Until next time, may all your financial decisions be clear, strategic, and most importantly, successful.